Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.
Are investors rotating into gold? This is Paul Harris for Kitco Mining at the 2024 Precious Metals Summit in Beaver Creek, Colorado. Joining me today to discuss this is Joe Foster, gold strategist at VanEck's. Joe, welcome back to Kitco.
Thanks, Paul.
Let's start off with some macro. Gold is at an historically high level of $2,500 per ounce or thereabouts. What are some of the factors that have brought it here?
Actually, there are many factors. There's just a lot more risk in the global economy, the global political scene. One of the things that we're seeing in this cycle that we've never seen before is that central banks are driving it. The physical demand from central banks, something we've never seen before. Usually in these bull markets, it's investment demand that drives the gold price higher, but we're seeing very strong central bank demand. We're seeing a lot of people worried about the geopolitical situation with the wars going on around the world and the potential for it to get worse before it gets better. Uncertainty around the presidential election, potential economic weakness. So there's a lot supporting gold right now.
Now, the US Federal Reserve is expected to start easing interest rates in the near future. How aggressive do you think it will be? And have the rate cuts already been factored into the gold price?
I think once the Fed actually starts cutting rates, I think gold will react further to that. I'm sure gold's factoring in a 1 or 2 or maybe 3 rate cuts, but I think once the Fed starts cutting rates, then the market will be looking to see if it makes a difference. Inflation is still elevated. It's running around 3% right now. It needs to get down around 2%. Can they get it down that low? If inflation is sticky at these levels, people are going to start factoring even more rate cuts. So I don't think the rate cycle is fully priced into the gold price yet.
Are you expecting a hard landing, a soft landing?
I'm expecting some turmoil. Whether it's a harder soft landing, I think the bigger risk these days is the debt levels, and our people, our countries, our investors around the world going to support the U.S. Treasury market? Is our budget deficits are just out of control? So I think there's risks in the market that could lead to turmoil across the economy.
Has debt got so far out of hand that it cannot be pulled back in?
It doesn't seem so. I mean, both presidential candidates don't seem to be interested in cutting deficits. They're running at over $1 trillion a year, just something that would have been unheard of not long ago. So it is out of control.
Wow. Now, you mentioned the importance of central bank buying at the moment, but in terms of the ETFs, we're also seeing Western inflows into gold ETFs. Been absent for quite a long time. Why is Western investment coming back into the ETFs an important factor? What does that signify?
So in a normal cycle, it would have been ETF demand that was driving the gold price. That's not been the case in this cycle. As I said a minute ago, it's been central banks. So the ETF demand that we're seeing just in the last month or two, I think it has been brought on by the shift in rate outlook. And I think added to that is the uncertainty around the world. But we haven't seen any real global crises that would cause more investment into the ETF. That's the type of investment demand that normally drives bull markets, and so far we haven't seen that yet.
Okay, now in terms of gold stocks, some gold stocks are up 100% year to date. A lot of investors are still very much attached to the big 7 tech stocks. To what extent or not are investors starting to rotate and cycle back into gold and gold stocks?
Oh, I think we're seeing, frankly, a lack of investment in gold stocks, and especially when you consider gold being at $2,500 an ounce. I'm shocked that more people aren't buying gold stocks. I think investors have been focused on tech stocks and Nvidia and these, other things that are driving the general market. There's no reason to own gold stocks if your other investments are doing quite well, and that's been the case. You look at central banks; they buy gold, but they don't buy gold stocks. So there just hasn't. We just haven't seen so far this cycle the rotation into gold stocks like we've seen in past cycles.
What do you think the tipping point will be that will see investors start to get back into gold stocks? Kind of hate to say it, but I think we need a crisis. I think I think the market really needs to get worried about the outlook for the economy, for the debt situation, or some other or some escalation on the geopolitical scene that expands that outside. It's focused on Israel and the Ukraine right now, something that broadens it to a more global conflict. I think that's the type of thing that it would take to really shake people up and get them to go to gold. Okay. Now, you're a very well-known figure in the gold space, Joe. You're well-known as the portfolio manager at VanEck, but you transitioned out of that role, a little over a year ago. What are you doing now? What are you focused on now at VanEck?
I'm the gold strategist, so I'm still on the gold team at VanEck, but I've just took a step back. I'm no longer portfolio manager. I've become a advisor and analyst at VanEck. I'm still following gold stocks, especially the smaller companies that we see at this conference, and adding to the team in any way that I can. So it's not retirement, but it's nice.
Well, what are the sort of companies you're looking for that you're liking? What do you really want to see?
What I really want to see is companies that are developing what will become world-class gold deposits and good quality gold deposits, and they're getting harder and harder to find these days. But every year we get one or two or three companies that sort of rise up and that produce the results that tell you, yeah, they're on the right track. They've got a property that's really going to be attractive to a lot of companies eventually.
Now, we've seen some big ticket M&A in the gold space recently, including with some development stage companies, noticeably with Goldfields buying out Cisco Mining to get complete control of the Winfield development projects. Do you think we'll see more of those kind of transactions? Are there some transactions out there that you think really should happen?
I do. And, I don't think we're seeing as much M&A as we might have expected at these gold prices. And if you look at what producing companies are using when they calculate their reserves and their forecasts, they're using a gold price of around $1,300, $1,400, $1,500 an ounce, whereas the gold price is at $2,500 an ounce. So I think as companies start to bring their base price higher, which they'll do if the price stays at these levels, more companies will be attractive and we'll see more M&A.
When I speak to the gold producers, they say they maintain a reserve price of $1,200, $1,300, $1,400 per ounce as part of their capital discipline. They're loath to increase that, loath to reduce cutoff grades. At what point do you think it will have to happen?
That's hard to say. They're kind of stuck between a rock and a hard place here because you raise your gold price, you lower your cutoff grades, then your costs go up, and nobody wants to see costs go up. But yet, you want to bring in more reserves and new projects into your portfolio. So it's a balancing act, and I think and the way they're playing that balancing act is they're being very selective and they're picking and choosing. So we get one or two companies disappearing, every year or so often, but it's not like it's not a frenzy like we might have seen in past cycles.
Given that we are in an historically high gold price environment, and many analysts think the gold price is going to go even higher or much higher even, do you think the strategy of the junior gold developers, does that need to change or adapt? Should they be doing something different to garner the interest of the bigger companies and investors, of course?
You know what? I think they're doing everything they can. This is another thing that's different in this cycle. Juniors have never been asked or had to do as much as they're doing today. I mean, they've got to deal with ESG and environmental issues that they never had to face before. They've got to, most of them have to go through a permitting process that they didn't. I mean, in past cycles, a producer, a major, somebody would come in and buy a good quality project when it's in the drilling phase. Now you've got to drill it out. You've got to do all the studies, the feasibility studies. You've got to go through the permitting. The permitting timeline has gotten so long that the larger companies they're not willing to do that. They leave it to the juniors to do it. Then they say, then we'll come in and buy you once you're near the end of the permitting process. So the juniors are doing all they can, in my view.
And to do that, that puts more of an emphasis on the team a junior has, both in terms of the depth and breadth of the skill set they have.
They've got to have right. They've got to have the team. They've got to have the experts, and in an industry that's kind of starved for talent and people. That's a tough ask, but yeah, they've got to do that, and they've got to raise the funds to support it.
And I suppose in another way, they also have to deal with the fact that a lot of the bigger gold producers, they're turning more towards copper. They want more copper, so they're having to compete against assets they didn't have to compete against in the past. What's your view on the bigger gold companies looking to get more copper? Is that a good thing? Is that a bad thing? Are you neutral on that?
I guess I'm neutral. I mean, I would, 10 years ago, I would have been dead against it. But what's happened, unfortunately, is these gold companies have lost the gold multiple. They used to trade at a multiple to base metal companies at a very high multiple because they were gold companies and investors were willing to pay a premium for those gold companies. That's no longer the case. So whether you're producing gold or copper, really, it doesn't pay off in terms of your valuation. So if a gold company has an opportunity with a copper asset, I go for it. Yeah.
Okay. How do you think the rest of the year will play out in the gold space?
Oh, I don't know. I think the gold price is going higher. I mean, I 2,500. It's been so resilient. This bull market has been so resilient. There's an underlying demand for gold that we're seeing around the world. The dynamics in geopolitics, the weaponization of the dollar. I just think that gold will push higher. Whether we end the year at 2,500 or 3,500 or something higher, I don't know. But I think the drivers are there to keep it going.
Excellent. Well, let's hope so. Joe Foster, thank you very much for joining us today.
Pleasure.
And I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.